Are buy-to-rent investment strategies viable? And the U.S. economic growth comes to a near halt in Q4, ahead on Monday's News Wrap. The newest business venture of the single-family market is comprised of large investors backed by private equity that use a buy-to-rent strategy. But how does this size up compared to professionally managed apartment complexes? And will these businesses last? Large-scale B2R investors emerged in 2012 as a new aspect of the single-family rental business. In 2013, the single-family rental market represented a total of 35% of all rental housing in the U.S. Freddie Mac posed the question if large-scale buy-to-rent is simply a product of the house price collapse or a one-time bargain purchase. If this is true, B2R investors may be temporary. Alternatively, if there has been a permanent shift away from home ownership toward renting, and if B2R firms have developed some new and more efficient ways to manage a network of single-family houses, large-scale buy-to-rent may be here to stay. Much has been made of the economic improvements that led to the Federal Reserve to raise short-term interest rates for the first time in nearly a decade in December 2015. However, economic growth nearly ground to a halt in the Bureau of Economic Analysis estimate for the fourth quarter of 2015, coming at an annualized rate of 0.7% in the data released on Friday. This estimate follows the GDP growth of 2.0% in the third quarter and 3.9% in the second quarter. You can check out all these stories and all the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again at the MReport.com, your source for the latest news and strategies in the evolving mortgage market.